Hey, what's going on YouTube? This is TerrenceRe, and I'm back at you with another video, but this one is going to be a little bit different. No real stock market update today, but I'm going to begin my technical analysis series of videos. And the first one I think that we're going to start with today is we're going to go over an introduction into candlesticks. And then we're going to build you all the way up until where you can set up a chart and basically be able to read a chart and make a decision on which way you want to go in the market. So basically, candlesticks, the origins trace back all the way to the 17th century in Japan, where rice traders developed the concept to analyze rice prices. There was a famous Japanese rice trader by the name of Munisha Hama. He gets a lot of credit for the origins of candlesticks. And then it made its way to the West, and a famous trader by the name of Steve Nison. I think that's how you pronounce it. It's either Steve Nison or Nison, Nison. I actually skimmed through his book before. I didn't read like word for word, but I did go over like some prominent candlesticks that he felt was that you should look for. And I may talk about those in the video, but I basically want to give you a short, brief overview of candlesticks, and then we'll use this as we lay in the foundation, and we're gonna build all the way up to where I help you set up some tools where you can make your own decisions based off of technical analysis. And then we'll throw some other stuff into that as well, maybe even some fundamentals, and then maybe even some quant stuff as well. So let's start. Let's get going. What you're looking at on your screen right now is these are considered bar charts. Let's see if I can make this really, really big on the screen. These are considered bar charts. Excuse me, not bar charts. Let me see if let me get my screen right so you guys can see. Is that what? All right, that looks better. So now you can see. Now, these are bar sticks or bar candlesticks. All right. And then if you're looking at this one, this is the S&P. I got the SPX up. S&P 500. And if you're looking right here, this is from the last day. This is from Friday. And if you're looking right here, you see this little line. This is where the market opened. So if you can see this little line that I'm hovering over with my mouse, that is where the market opened. And that is the open. So the market opened at 9:30 at 43.8938. Right? And now you can see that it went up to here, to the top, and down to the bottom. And it closed over here. So this line to the right of this center, this is where it closed. So you got your open, your high, your low, and then you got your close. And so it closed higher than it opened. So it closed at $4,405.71. Now, that's why you see it being green, because it closed higher than it opened. If we go the day before, we'll see that it opened here. It went up just a little bit, but then it came all the way down here and then closed at the bottom. So it closed lower than it opened, which gives you a red bar. And that's the basics. So you got your open, your high, your low, and your close. Now, the only traders I really see using bar candlesticks are pretty much old school traders. There's nothing wrong with it. I don't use it. But this is one of the oldest. I think this is the oldest form of candlesticks. Now I'm getting ready to go to the ones which you normally see me do my videos on, and you'll see this is what you will see most of the time. These like this right here. Now with this right here, I'm going to look at this same candlestick, right? So on here, it's a little bit different. It's a little harder to be able to see the open, the close, but you can tell so this will be your high, obviously, and that will be your low. So to look at the open, you will come to the bottom of a green candlestick, and because it's green, that lets you know that it closed higher than it opened up. And you can see right here, it closed here. These at a glance, so you can look at these candlesticks at a glance and gather the information that you need. So that's that. Now, I will go over some. Now, you may want to look at your charts. You may not want to look at a bar or these box candlesticks. You may do something like just a line, right? So you can put it on a line. Now, I do see a lot of traders using lines, which makes it kind of easier to see. If you're somebody that you're not actively trading, a line may be easier for you to be able to trade on. Another one, this is like I think they call it like a equal volume, like see this? So this basically is the line, but everything under it is just shaded. You'll never see me use that. The line you may see me use sometimes just to draw like trend lines or something like that. So sometimes I'll draw trend lines on it and then bring it back to my box candlesticks. Another one, I'll show you another famous one. Now you got Renko. I don't use Renko bars. Um, Renko bars will, in my opinion, show you turns in the market pretty well, but you may be late to a trade, so that's just one of those things. I don't really like Renko. That's Renko tick charts, which is you got to set the ticks. I was trying to find Hikanashi. That's probably like another famous one. I don't really see it. There you go. Here are your Hikanashi candlesticks, which is really great for identifying trends. And there's a certain way that they're calculated. Some traders will use this as trend trading and just will go with the color. I've seen traders look and see like once it turns green, they'll buy, and or if it goes red, they'll sell. Now sometimes you can get faked out or you sell right here, or you sell right here, just depending. You may hold it for 2 days, then it turned green again. So this is more for trend trading. But for me, I'm gonna deal with the one that most people use that I'm more accustomed to, and that's these regular box, what I call them box candlesticks, because they're shaped like a box. So I try to keep things simple. Now, simple is always best for me, and that is basically the origins of candlesticks. Now, the next video, make sure you tune in. So the next video, I just want to go over candlesticks, give you a basic outline. So you come to your chart, figure out which ones are, easy for your eyes to identify, highs and lows. You just want to be able to identify, where the market is. And one of the reasons before I end this video, let's talk about one of the main reasons why I like these types of candlesticks is because of the wicks. And I'm going to show you off of a real example of Boeing. And pull up Boeing. I want you guys to look at this right here, this candlestick right here. You see this? This is what we would call a wick. So one of the advantages and why a lot of people use these type of candlesticks is so that they can identify wicks. It's hard to identify what would be a wick with a bar, right? You can do it, but it's very hard. So right here, you can easily see this wick. And you would say, well, why? Here goes another wick. because a lot of times when you see long wicks like this, that means if it's like where it is in this position, that's letting me know that buyers came in at a certain level, which identifies with this wick. Let me show you. This is really going to go into my support and resistance training, but this will help give some information on candlesticks as well. You see right here, see this wick right here, right? Now I'm going to draw a rectangle all the way across. Now this wick identified that, so that means that market was running down to here, right? It was running down to here, and then buyers came in and bought it up. I mean, they bought it all the way back up to here. This also shows where buyers came in and bought this stock up, and it even gapped up the next day and ran up. So this would identify as a support level. And whenever you see these wicks like this in the market, just like here up at the top, look at this wick, right? So if I drew another rectangle on this wick from here, look at the wick. You just go look at these wicks, wick, wick. Look at the wicks. That's letting you know, like, hey, this may be a potential turning point. This would be resistance. This would be support. And you can see that they bought this market up. Now, these are all daily candlesticks. All of the training that I'm going to do in technical analysis, we're going to be dealing with, for the most part, daily. We're going to deal with daily candlesticks because it's been my experience that when you go to smaller time frames, you will see these same candlesticks, right? But they're not as definitive, and they don't set levels like they do on the daily. And then if you go to higher time frames like a weekly, a monthly, you can find support and resistance levels there. But it's just been my experience that dailies are the best for finding your level. Stay on the daily. When we get into moving averages, your moving averages coincide with the daily, like your 200 simple, your 50, your 20. Those moving averages really work best on daily candlesticks. So that's what we're going to do most of the training on for here. And hope you got something out of it. Let me know if there's something else you want to learn about. I'll try to make sure I cover everything in this series. Hit the like button, hit the subscribe button. And with that, guys, I'm going to be out. Peace.